Hey guys, this is Hamza, and in today's video we're going to talk about investing in the stock market versus investing in real estate and who wins. The reason I'm talking about this is because we have seen a little bit of volatility in the stock market in the past few weeks. So I thought I would share my thoughts on this topic and see who comes out on top. Now before I get into today's video, please remember to hit that like button for the YouTube algorithm. It's completely free and I promise it won't bite. Just like all this valuable content that I'm putting out there. Now before I get to who the clear winner is here, I need to dive in a little deeper and explain what both stocks and real estate are, and go over some of the pros and cons. When you invest in the stock market, you are basically buying stocks. A stock represents a piece of the company, which means you are now part owner of that company and you have contributed equity towards that business. Now if that business makes money, you make money. If that business ends up losing money, you also end up losing money. But don't let that scare you. So basically what I'm trying to say is that you have fractional ownership in the business. Now that we have that out of the way, let me talk about what investing in real estate means. When you invest in real estate, you are for the most part buying a tangible asset, something you can see and touch. Whether it's a piece of land, a home, an apartment, an office building, an office warehouse, or any other type of asset. There are some instances where real estate becomes intangible, but those are very rare, like air rights. And if you don't know what air rights are, I'm going to cover that in a future video. So stay tuned for that. So now that I've given you a better understanding of what investing in the stock market means versus what investing in real estate means, let's talk about some of the pros and cons. Let's start with real estate investing. The first pro about investing in real estate is that it is very easy to understand. It's a fairly simple process. You buy the property, you manage that property, you lease that property out, and then you can either release it or sell the property over time. This is a tried and tested system, and people have been doing this for generations. And of course, everybody understands that this is a tangible asset. So you actually get to buy something that you can touch and see. Hence the word real estate. The whole reason it's called real estate is because it's real. Get it? Real estate. Another pro is that it is safer to invest with debt in real estate than it is in the stock market. This is also known as your mortgage. You can invest in real estate with a 20% down or even less in some cases. But chances are, if this is an investment property, you're most probably putting 20% down. What this means is that the rest of the property cost can be financed. And of course, without saying, placing debt when you're investing in stocks, also known as margin trading, is highly risky. Simply because stocks are much more volatile and you can get a margin call anytime. This is of course not the case with real estate, which is why I think it's safer to place debt on real estate. Another pro for real estate investing is the huge tax benefit that you can get. In recent years, through the process of cost segregation, you are now allowed to depreciate real estate at a much faster pace. And what this means is, every time you buy real estate, you can now depreciate it very quickly, meaning you don't have to pay any taxes on any of the gains you will have after just a couple of years, especially if you use leverage or place debt on the property. Once again, if you want to learn more about cost segregation, I am going to be dedicating an entire video later on that topic. Now that we've covered the pros of real estate investing, let's cover some of the cons. And of course, the largest con about real estate is that it actually takes a lot of work. So let's just say you buy a property, now you're in charge of the upkeep, the taxes, the insurance, the management. It is by no means an entirely passive investment. And owning properties requires much more sweat equity than purchasing stocks. Let's just be honest, buying a stock is just so much more easier, and it really doesn't require any work on your end. Another con about real estate is that it is very expensive and very illiquid. So for those of you who are already invested in real estate, you guys know exactly what I'm talking about. For those of you who are not yet invested in real estate, you have to realize that you need a large sum of money, and you also need to be willing to park that money in that piece of property for a long time. All the real estate I own, I hold for about 5 to 10 years. And I think that is the average with every real estate investor. Another con about real estate is the very high transaction costs. This is something that I think is currently being disrupted by a lot of startups. But currently, investing in real estate has very high transaction costs. Between title insurance, closing costs, and brokerage fees, you could end up spending 6 to 10% of your property value, which is extremely high considering that you can now buy stocks from most major stockbrokers for free. Robinhood entirely disrupted that business model. And now for anyone looking to invest in stocks, you can do that for absolutely $0. Now that we've covered the pros and cons of real estate investing, let's get into some of the pros and cons of stock market investing. I'll start with the pros and then move on to the cons. The first and the largest pro of investing in the stock market is that it is absolutely liquid. And that means you can get your money whenever you want it. You may still want to consider calculating when exactly to take out the money just for tax purposes. Other than that, it's really highly liquid. Another pro for investing in stocks is that you can diversify your portfolio fairly easily by investing in different funds, different sectors, and sometimes even different countries. And you can do all this with a click of a button. That's something that you definitely cannot do with real estate. I think we're gonna get there someday, we're just not there yet. Another pro for stock market investing is that you can actually grow the money stock free if done correctly through your 401k or any other tax deferred or tax-free strategy. These are fairly simple to set up these days with technology and the internet being widely available. In most cases, your employer can help you set this up. And if you don't have an employer, the internet is a place where you can learn everything these days. You can set these things up in just a couple of minutes. Now that we've covered the pros of stock market investing, let me cover some of the cons. First one is that the stock prices are highly volatile. And what this means is that you really have no control over what the stock price is going to be or what fair market value for that stock actually is. And as news pours in, every single day, the stock price will fluctuate, go up and go down depending on the news or depending on how that stock is performing compared to the news. So when investing in stocks, always do your due diligence ahead of time and make sure you're investing in the right company that matches your values and your expertise. Another con of investing in the stock market is you. Yep, that's right, your emotions. Right? Just because you can buy and sell stocks so easily with a click of a button, a lot of people get emotionally attached and start making bad decisions when investing in the stock market. The data shows that 90% of day traders actually lose money due to emotional decision making, which is where AI and robo traders are picking up. So you have these machines who make decisions based on algorithms rather than emotions. And in many cases now, they are proving to be better than the human mind, which is fascinating. The last and final con I have for the stock market is the tax gains. If not done correctly, you could end up paying a lot of tax on any of the gains you guys have on your stock investments. So consult with your CPA to understand what strategy will work best for you when investing in the stock market. Now that we've covered the pros and cons in both real estate investing and the stock market, I can tell you that a happy medium, at least for me, is to invest in REITs. That's REIT. And that stands for Real Estate Investment Trusts. And this is basically a vehicle where you can invest in real estate through the stock market. A good thing about REITs is that they are taxed a little differently than your normal stocks. The bad thing is that although they have a high dividend, meaning they pay a high distribution every quarter or every month, they do tend to grow a little slower than other stocks. So that's something you need to take into consideration. So now it's time for me to tell you guys who the overall winner is. And it's exactly what you suspected. It just depends. How much work are you willing to put in? If you want to be active in the business and have complete control over the money-making process, then real estate investing is definitely a better bet. However, if you're looking to be more passive and you're not interested in doing any of the work and you think that other people are doing a better job than you would investing, then investing in the stock market is definitely a better thing for you. So in the end, it all depends on your personal goals. I personally am invested about 90% in real estate and 10% in equities in the public markets. And even in the stock market, I tend to invest in REITs just because I like that monthly distribution that I receive. If you guys are still in the video, remember to hit that subscribe button and smash that notification bell so you guys are notified the next time I post a new piece of content. And just like that, this video is over. I'll see you guys next video.